But it's time now for a look at the latest business news, starting with a new assessment of how the coronavirus outbreak is impacting the Chinese economy. Our business editor, Stephen Carroll, is here with the details. Stephen.
Actually, we've had a slew of warnings already from companies in various sectors about how the virus outbreak is affecting them. Now, one of the major ratings agencies has given a broader assessment of the effects on the world's second largest economy. S&P Global Ratings looked at how much Chinese growth might slow down depending on when the virus peaks. It says that if next month is the height of the crisis, growth for the year will be around 5%. However, if it peaks in April, that growth could fall as low as 4.4%. Remember, last year, China's economy grew by just over 6%. Now, one of the major alarms that S&P is sounding in this report is how the crisis may affect the banking sector, in particular, how there could be a massive increase in terms of bad loans. Banks could, S&P says, be dealing with an increase of up to €1 trillion in its what's called non-performing loans. Beijing has already started to take action to tackle this. It cut a key lending rate in its financial system earlier. Nonetheless, Chinese banks may face serious strain as the slowdown in the economy bites them. Meanwhile, more companies are warning investors of the impact the virus is likely to have on their businesses. Air France KLM saying that it expects a financial hit of between 150 and 200 million euros by the end of April. The carrier has suspended its flights to mainland China until at least the end of March, a deadline which may be extended further. Those flights representing 5.5% of Air France KLM's passenger traffic. We've had a similar warning too from Australia's Qantas today. It's expecting a hit of around 90 million euros to its results. The airline is cutting back on flights to all of Asia due to a drop in demand. It's grounding the equivalent of 18 planes, with staff being encouraged to take annual leave to reduce the cost to the company. Now, while many industries are suffering as a result of people staying at home in China, some sectors are cashing in. Figures published by the Financial Times show there's been a boom in app downloads. They were up 40% in the first 2 weeks of February. Users primarily downloading games, but also educational apps. That's boosting the shares of some companies in this sector. Tencent shares are trading at their highest level in almost 2 years. Well, let's take a look at how the markets are trading today. That rate cut in China playing into trading in Shanghai. Shares up 1.8% on the Shanghai Composite there a short time ago. Not the same picture, though, across the rest of the Asian markets. The Hang Seng in Hong Kong and the Kospi in Seoul both in the red. And we saw the Nikkei in Tokyo earlier getting a boost from a weaker yen. That's helping to boost exporting companies there. On the currency markets, the euro is continuing its slide against the dollar. It's trading under $1.08 still today. That's close to the lowest level in 3 years, and 83.6 pence sterling as well. To other news, the European Union is moving ahead with plans to help companies share data across borders. It's an effort to boost development of European tech giants to rival the US and Chinese companies that dominate this area. Luke Schrego has the details.
For the European Union, it's time to take the fight to the world's biggest and foreign tech firms, hoping its own industry leaders will become part of a continental single market for data.
The battle for industrial data starts now, and Europe will be the main battlefield. Why? Because we have in Europe the more coherent, the strongest and the largest industrial base. And most of this data at the beginning will come from our industries.
As the world becomes increasingly connected, Europe has yet to develop what amounts to a trove of industrial data. Following on the heels of its GDPR policies, regulation directed at protecting citizens' private data, Brussels hopes its potential new digital market could also become a global benchmark, with non-European firms conforming to a continental standard on data use. It would include rules on cross-border data use, an EU cloud platform alliance, and even define the lengths to which artificial intelligence could be used, for example in healthcare or with facial recognition, something so far limited except in certain cases.
A person must always be in control of critical decisions, and so-called high-risk AI, this is AI that potentially interferes with people's rights, have to be tested and certified before they reach our single market.
Big tech firms have welcomed the EU not taking a blanket approach. And while the proposals are just a first step along the path towards ratification, Brussels is hoping for draft laws by the end of the year.
Finally for me, do you ever wonder what happens to old planes when they're taken out of service? Well, the first A380 Super Jumbo owned by a commercial airline has been retired, and a German company is turning its fuselage into these tags. Now, it's marking the occasion of the first retiring of this plane that was in service for Singapore Airlines between 2007 and 2017. These first tags actually sold out within 48 hours, but there are more on the way as Airbus is phasing out production of the A380 and other older models are set to be retired soon. Haxie.
Very interesting stuff. Stephen Carroll with the Business News. Thank you very much.